Investing knowledge brought to you by OCBC Bank. So, without further ado, to start off our event, introducing our first speaker, Madam Yi Ling, who, fun fact, is actually a Permata Dunia also. So she's here today to share her wealth of experience with us regarding on the principle of finance. So with a round of applause, I'll pass the floor to our speaker today.
Hi everyone. So glad to be back in MMU again. Right, yeah. So today I'm going to share with you guys some of the very basic understandings about investment, right? And also some of the principles to adopt when we investing, right? Okay. Yeah. So before we go into the in-depth of the topic today, let's talk a little bit about why should we invest. Okay. Yeah, I believe all of you will have your own financial objectives, okay, your own financial goals along the way. During different life cycle, you will have different needs as well. Okay, so we may talk about buying a dream house, okay, or dream cars, right? Any one of you plan to retire by the age of, say, 40, right? Yeah, anyone thought of that? Okay, yeah, so have you started to plan on this? Okay, yeah, so the key question is, have you taken any action in order to work towards retiring earlier? Okay, yeah. And any one of you started to talk about marriage, planning for your marriage? Yeah, so perhaps after graduation, right? Okay, then find your life partner. Okay, yeah, someone planning already. Then travel around the world. Okay, so these are some of the financial objectives that we are looking forward to. Okay, yeah, but of course it is not as easy as we thought. Okay, in order for us to achieve all these kind of financial objectives, right? Because we also need to take note about something called inflation, right? Because prices keeps moving up. Just for example, here we have a basket of goods, okay, back in 2012, the cost was somewhere around 200 ringgit, okay, and then subsequently, when it comes to today, 2024, the same basket of goods may cost us 280 ringgit, okay, so this is an incremental of 40%, so roughly about 3.3%, 3.4% per annum kind of increment, okay, yeah. So more often than not, prices actually move so much faster as compared to what we earn. Okay, perhaps you guys may be puzzling now. Okay, because maybe you all have not started work, right? But subsequently, when you started working, then you realize that no matter how much you earn, okay, you still feel a distance in order for you to achieve your financial objectives. So therefore, we really need to look at how we can achieve these financial objectives. Okay, yeah, and not just about inflation, we also talk about shrinkflation. Okay, yeah. So for example, a packet of cream cracker back in 2012, okay, it was weighed around 410 grams. But now, today, this packet of crackers has shrunk, okay, has become smaller in size, and when you take a look at the weight, is only around 300 grams, okay, yeah. And at the same time also, when we talk about lending money, okay, you borrow money, and the money that you earn by putting in a bank, for example, in deposit, okay, in fixed deposit, how much are we earning? For example, FD rate nowadays gives us about 3%. But when we talk about personal loan, for example, it can cost you so much higher. Okay, so in order for us to really gauge how much is the net, okay, the net cost that we are forking out, right? Yeah, we use real interest rate to measure. Okay, which is by using your lending rate, taking out the inflation effect. Okay, so that will tell us in general how much is our real interest rate that we are facing. Okay, and in 2023 itself, real interest rate is at 7.3%, so it's relatively high, okay, in comparison. Yeah. So in order for us to ensure money work harder for us, the tips is really to start saving earlier. okay, so start saving earlier, and then subsequently we look at any channel to invest your money, not just working, but also look for business investment, for example, okay, invest into financial vehicles, as well as look at compounding, okay. So here we have this power of compounding interest, okay. We apply rule of 72. So this is a very simple, straightforward tools in order to help us calculate, for example, if let's say we have a capital of 100,000, right? So it basically helps us to measure how long does it take or how many percent is required, okay, in order for us to double our 100,000 to become 200,000, right? Okay, so the formula is pretty simple. You just need to use 72 divide by the return, okay, interest rates. It will equals to the years to double your return, okay, vice versa, 72 divided by times or 72 divided by return. So we have the example here, 3% interest rates, okay, so it basically takes us 24 years to double up your 100,000 to become 200,000, right? Yep. So this is just an illustration, a comparison to showcase. If you put your money in an FD that gives you 3% per annum, so that basically takes us 24 years to double up our return rate, okay? But there's a Chinese saying, okay, from a TVB drama, okay? So the Chinese saying goes like this: how many 10 years do we have? Right. So this is a question to ponder upon, okay? So in order for us to really maximize our time, right, then perhaps we should look for something that generate better return, correct? Okay. Yep. So we talked about 5%, for example. Yep. Something that is not too aggressive, just slightly more risk, okay? But then let's see how this will help us to generate our income, okay? Instead of using 24 years to double up your income, it will shorten effectively by half, okay, to 14.4 years. Or 10%, okay, slightly more aggressive, again, 7.2 years, okay? So these are how we can actually look for alternative to help us ensure money working harder enough for us, right? So that is on why investment, something for you all to think about. And next, let's take a look at some of the basic understanding on investment. So first of all, we talk about asset classes, right? So we have retail bond, cash, unit trust, as well as structured investment that is available in OCBC, okay? So these are just some of the basic products that we are having, okay? Some of the solutions that we provide, okay? For example, like a retail bond, basically it represents loan, okay? Loan, like when banks provide loan to customers, for example, like housing loan, car loan, correct? Okay, so we are basically borrowing money from banks, right? Yeah. And then for retail bond, for corporate bonds, usually what happens is these are the companies issue bond, and then they raise fund, they borrow money from public, right? So usually in a retail bond, they break into retail size, then subsequently they will pay a fixed coupon. For example, let's say I want to borrow 1 million from you, okay? Yeah, so I'll write you a contract, okay, to say that in 5 years' time, I'll repay you back the 1 million, okay? But of course, in between, I need to give you something, right, in return. Otherwise, you may not want to lend your money to me, okay? So in this case, we put, for example, here, 4% per annum, okay? Yeah, and stay a tenure. So as simple as that. So it's a contract of loan, okay, between companies and also towards public. And then we have cash, right? It can be in foreign currency, in money market, right? As well as fixed deposits, okay? Yeah, because for Malaysia, actually, we are not too bad. We are still offering relatively high FD rate at this current juncture as compared to many other countries. For example, the most the closest to us is Singapore, right? If you go to Singapore, you put money in FD, their FD rate is very, very low, okay? 1% or even lower, okay? But now we are offering somewhere around 3%, okay? Yeah. So we also have unit trust, okay? Unit trust basically refers to a pool of funds that we accumulate from investors, right? Then subsequently, we will take this pool of funds to invest by fund manager, okay? So fund manager will help you to invest this pool of funds into different instruments. For example, into equities, for example, into bonds, right? Or other asset classes, okay? Yeah. And last but not least, we also have structured investment. So basically, structured investment, right, is a tailor-made solution for clients, okay? It can be a mixture of bonds and equities. It can be a mixture of currencies, right? And then all the terms and conditions, criteria are all custom-made, okay? So these are just a glance of some of the assets available in the market. Yeah, so this is a very colorful slide. So it basically represents the markets as well, okay? Because markets, sometimes we may have dark green, okay, very, very deep red, okay, sometimes lighter green, lighter red color, right? Yeah, it's very happening in the market. But anyway, it basically refers to different sectors that is available in the markets, okay? Yeah, for example, we have utilities, financial, healthcare, technology, commodities, and so on and so forth, right? And at the same time also, when we take a look at markets, right, for every economy in general, they have a market cycle, okay? Yeah. The simple stages of market cycle will be boom phase, when market is doing very, very well, okay, it's expanding, and then after that, it reach somewhere like a mature kind of stage, right? Then subsequently, it may slow down, okay? After slowdown, then leads to a recession, okay? Then after recession, we have recovery, then back to boom again, right? But of course, it is not that all economy will, go through these market cycles accordingly, okay? They may not go through every stages as it is as the flow, okay? Sometimes they may skip, slow down, or sometimes, for example, like today, we talked about soft landing, right? Okay, because earlier on last year, we keep talking about U.S. market may hit a recession, okay? But then now, there are more and more analysts are talking about a potential soft landing this year instead of recession, okay? Yeah, because there are many other supporting data, okay? Yeah, so this is just an example on different market cycles. Yeah, and in different market cycle, usually certain sectors may work better as compared to the other sectors. Okay, for example, when it is in a boom phase, you might want to invest your money into things like technology, into perhaps materials, okay, because we are talking about booming, market is booming, then you may have a lot of constructions ongoing, right? A lot of demand in the market. So you might want to put more money into growth companies, growth stocks, okay? Vice versa, when it comes to slowdown phase or perhaps recession, then you might want to be a little bit more defensive, okay? So perhaps you can look at things like financial, healthcare, okay, or into consumer staples, because these are the things that is the so-called essential things, okay, in our daily life. You won't say that, let me see whether there is war or not tomorrow, okay, whenever you fall sick, right, okay? So when you fall sick, immediately you need to consult medical assistant already, okay? You cannot say, maybe let the war cease, then only I go see doctor. Cannot, right? Okay? Yeah. So therefore, these kind of sectors is deemed as more defensive kind of sectors, okay? But of course, not necessarily that, when there is market turmoil, then you say, okay, I just put everything into utilities or put everything into healthcare. That's it, okay? Because market changes very rapidly. Sometimes, the moment you say, I think technology is very low already, I want to buy, but then you might miss the boat, okay? Yeah, and then sometimes market changes, right, might actually change everything also. For example, like 3 years back, if you guys still remember, during this COVID period, right, we always say in the book, we always learn that, bond and equity, they work how? Is it in a positive correlation or negatively correlated? Negative, right? Okay, thank you. Yeah. However, when we take a look at during the COVID time, right, what happened? So your equities came down, then basically bond also came down together. Okay, so that is something really unprecedented. Okay, yeah. So that's why it is still important for us to always look at diversification instead of just bet on one sector. Okay, so basically this is just to showcase basic sectors understandings. Yep. Then subsequently we look at indicators, okay, to help us to look at the market situations and also to help us to make investment decisions. Okay, so here we have two basic types of indicators. We have leading indicators as well as lagging indicators, right? So leading indicators tends to give us a picture, okay, or an indication to tell us what might happen in the near future, right? Okay, and the other way around, for lagging indicators, usually the data that came out, right, might be lagged, okay? It might be last quarter's information, last quarter data, okay, or a year ago data, okay? So that basically help us to confirm the trend, okay? To confirm, to say that, yeah, market is really trending upwards or market is really trending downwards. Okay, so these are the two basic type of indicators. So here are some examples. So we have this manufacturing PMI, stands for Purchasing Manager Index. Okay, yeah. So what is this about? It's basically a survey done to multiple companies, right? Okay, basically they will look at companies' activities in terms of their orders, new orders, existing orders, right? As well as productions, employment, and etc. etc. Okay, yeah. So when you have a reading that is 50 and above, so basically it tells us that in the near future the company may be, the economy may be expanding. Okay, because in general, these companies, right, they are having more new orders. So when you have more new orders, right, what will happen? You will need to have more production, right? Okay, more production means hiring more staff and to run your production. So when you have more goods to sell, eventually it will translate into sales and revenue at the end. Okay, yeah. So in general, it tells us that in the near future you may expect more sales and profit. Okay, yeah. Vice versa, if let's say your PMI reading is 50 and below, then this is something not so good lah. Okay, it tells us that your economy might be shrinking in the near future. Okay, yeah. So from here, from this chart here, we have two parts. Okay, one part represent the developed countries. Okay, yeah. For example, like your US, UK, Europe, right? Then another part is all the Asia countries as well as emerging countries, right? So from this chart, we can see that Asia and emerging countries tends to look a little bit more brighter as compared to the developed countries, because most of them are having, PMI reading that is touching below 50 lah at this current juncture. Okay, yeah. Then next, on consumer sentiment. Okay, again, this is a survey done with consumers, right? So basically what they measure, they will ask questions to look for, their financial condition at this current juncture. Okay, they also ask them about how they feel about financial economy situation in the near future as well as in longer term. Okay, so they will ask many questions, altogether 50 questions, to ask about their income level, their debt, and also their spending behavior. How confident are they going to spend in the near future? So this basically gives us a future guidance. Okay, yeah. So like last time, we do have higher consumer sentiment, okay, back in pre-COVID time. But subsequently, we are seeing weakening consumer sentiment of late. Okay, yeah. So this is on consumer sentiment. Why do we look at consumer so much? Okay, especially when we talk about US economy, right? Okay, it's also because for US, their economic growth, right? 70% of the economic growth is basically contributed by consumption, personal consumption. Okay, yeah. So therefore, we take a lot of attention into all these, consumers' sentiment as well as their income strength. Okay, yeah. So same thing, we look at initial jobless claims, right? It represents how many people file for unemployment benefits, okay, in US on week-to-week basis, right? So this is another leading indicators. Yeah. Okay. Yeah. So this is during the COVID time. As we all know, it was a total lockdown. Again, something that is unprecedented. So during that time, really, many people they filed for these jobless claims, right? Then subsequently, markets started to trend back to normal. Okay, yeah. And next we have this housing starts, also something similar. When you have new projects, new housing projects, okay, new taman, new areas, right? Okay, so this is a place where we see potential in terms of construction, for example, in materials, right? And then subsequently it may translate into home sales. When you have more home sales, then renovation comes, furniture comes, right? Okay, so this also gives us an idea about future development of the economy all in all. Then we have lagging indicators. Example here, I think this is a very important in economic data in the market, which is on GDP. Okay, so it basically measures the economy itself. How is it performing? Okay, is it growing or is it slowing down? Right. So this is a simple formula to measure GDP by using the expenses approach, okay, which is by adding up your personal consumption, business investment, government spending, as well as net export, right? Okay, so from this graph here, you may notice that, for developed market, they tend to have lower GDP growth, okay, because they are pretty developed already, so there are lesser room for them to grow, okay. Whereas for emerging markets like China, India, they have ample of lands, right, and empty lands for them to develop further. So in this sense, they tend to have higher GDP growth as compared to the rest. Okay. Yeah. And we also have this earnings, okay, our average hourly earnings, okay, as well as unemployment rate, again, to look at how healthy is the job, okay, the job condition in US markets, for example, okay, yeah. So for unemployment rate, usually when it is ranging somewhere around 4% is considered healthy, okay, yeah, cannot be too high, cannot be too low, yeah. When it is too high, that means a lot of people don't have a job, right, okay, so this is very concerning. But if it is too low, what will happen? Isn't it great? Isn't it a good thing? Not really, right? Okay, so imagine companies, HR, for example, like OCBC, when your unemployment rate is very low, right? That also tells us that, available CV in the market, right, is very little. So what you need to do is, you might need to knock your neighbor to ask for talent, okay? So in order for you to attract talent from elsewhere, it may require higher costs, okay? So in this sense, when your unemployment rate is too low, it might not necessarily be a healthy thing as well, okay? So healthy range should be somewhere around 4%, okay? Yeah. Then we have this inflation rate and also interest rates, okay? So this is something very important nowadays, especially, okay? Because during this COVID period, right, remember, everyone got locked down, okay, at home. So economy is not running. So what happened is that the central bank need to help all these people, right? Okay, yeah. So what they do is they lower down interest rate all the way to 0%, right? They also offered some additional things, for example, like moratorium, right, stuff like that. And they print money to give subsidies to all these household, right? Yeah. But subsequently, when 2021 come, when markets started to reopen slowly, gradually, then we see an influx of revenge spending, okay? Revenge spending as well as traveling, okay? So that has basically jacked up all these inflation prices. So you can see from here, inflation, okay? Inflation data has spiked up all the way to 9.1%, okay? So when inflation is high, what central bank need to do? It is basically to increase interest rate, okay? So when you increase interest rate, what will happen? It encourages savings, right? Because your FD rate is so much higher, okay? So you will put more money into savings, right? And you will spend lesser because the moment you borrow money or you spend, then the cost is very, very high. Okay, borrowing cost very high, so you might think twice whether you want to buy house or not. Okay, so that is a time where people tend to save more money. So eventually, when you save more, less spending, it will help to push down the inflation. Okay, yeah. So therefore, we have seen inflation started to trend back down once again. Yeah. So now, for Federal Reserve, what they are looking at is for inflation to continue to trend back down to somewhere around like 2% on long-term basis. Okay, and at this current juncture, because during this period, right, they have checked up interest rates all the way from 0% to 5.25 to 5.5% range, right? Then now it is time for them to look at normalizing the interest rate. Okay, normalizing to somewhere around like 3%, let's say. Okay, yeah. So therefore, they will continue to monitor interest rate progress, inflation progress, as well as on interest rate guidance. Okay, yeah. So the next one is on central banks commentaries. So for central banks around the world, different central banks, usually they will host this meeting on periodical basis. For example, like Federal Reserve, right? They will have it like 1.5 months once, okay? Then when they gather, what they do is to assess all these data, job data, interest rate, inflations, right? As well as other informations. After they digested all this information, right? Then subsequently, they will vote, okay? All the committee will vote to see whether should they increase or decrease the interest rate, okay? So this is basically for them to look at managing and balancing the monetary system, okay? Yeah. So every time after their meeting, for example, like we just had this Jackson Hole, right? Okay, a couple of weeks ago. Okay. So usually the chairman will come out and say something, okay? So that is a time where market investors globally, they will look at the speech and see how is the directions of the Federal Reserve. Okay, for example, more recently, when we take a look at Jerome Powell's speech, right, he say it is time for them to cut interest rate. Okay, so that's why now market, a lot of them are pricing in 1 cut or 2 cuts, okay, from Federal Reserve. Okay. Yep. So next we will talk about some investments behaviors as well as some techniques. Okay. Yep. Is it easy for you to start investing? Any one of you have started investing? Yep. That's very good. In share markets? All right. Good. Anyone? Bitcoin? Yes. Okay. Unit trust or structured products? Right. Okay. Wow, great. Yeah. Okay. So for those who have started, yeah, that is very good. But for those who have not started, what is hindering you? Okay. Yeah, because we encounter a lot of customers, right? Especially uncle aunties, okay. usually for youngster, because you all understand the market, you all understand what is happening, right? Then the risk is so much lesser. But for those who do not follow the market, they may feel that, investor, no lah, not now lah, because now we are talking about World War III, right? Okay, now there are more noises about World War III. And then they talks about, it's okay lah, because there's another disease coming, you see. Yeah, got Mpox. Yeah, now they call it Mpox. Yeah. So because of all this news, right, then they say, perhaps let me wait. Maybe next year only I invest, okay? But the fact is, in the market, there is, ongoing noises lah, okay? Yeah. So there is not a single year that we don't have news, right, in the newspaper, because all these news reporters, they also want their job, want their salary, right? So what they do is, they will publish all these headline news, okay? So this headline news, usually people only read the headline. So this headline basically also somehow misled some of the readers, okay? So that also created a lot of noises, okay? Yeah, but the fact is, there is endless news, endless events happening in the market. We had global financial crisis back in 2008, trade tensions, 2018, okay, between US and China, COVID-19, then Asian financial crisis, this tech bubble burst, okay, the dot-com bubble, still remember? Maybe some of you haven't born yet, sorry, okay, so I just revealed my age, okay, yeah. So these are ongoing events that is happening, okay. So it's not easy to really for new investors to talk about start investing, but let us share with them more good news later, okay. Yeah. So when we talk about investment, we always want to buy low, sell high, right? Anyone want to buy high and sell low? No, right? Okay. But buying low and sell high, is it easy? Not easy, right? And more often than not, we usually adopt this herd mentality. Okay. So what is herd mentality? Basically, one person says sell. If you have more people saying sell, okay, giving a sell call, so what you will do? Well, now everybody say selling, right? So might as well run first, okay? Yep. So this is what happened, okay? Every time when there is a strong call for sell, then everybody sell, rush to sell in the market. Then when everyone say, oh, Nvidia keep going up, and then it's going to do uni split soon, okay? Back in July, okay? So everyone rushed to buy Nvidia, and then subsequently what happened? You kena? No, it's okay. You can tell me later. Okay, so therefore, a lot of investment decision, right, is based on herd mentality. Okay, so that causes a lot of pains to investors as well. So what should we do instead? Okay, so we need to look at market emotion. Okay, market cycles. Just how we talk about market cycles, so in terms of investing emotion, we also have cycles. Yeah, so you go through this optimism all the way to euphoria. Then when there is a slight drop, 5%, 10%, then you started to think that, is it okay? Is it okay for me to continue to hold on? Maybe wait for a while, then you will rebound. Okay? So you started to fall into a denial. Then subsequently, market continue to tumble further. Yep, you start to feel fearful, panic, and then subsequently dismay. Okay, so during this time, you may say that, that's it, investment is not my thing. It's time for me to get out, right? So immediately after you came out from the market, so what happened? Market rally, rebound, okay? So this is the time where you say, okay, this is the time I should start invest again. So you feel very, very good, okay? And again, you repeat the cycle, okay? So instead, what we should do is, anyone know this guy? Okay. Yeah, very good. So this is a very successful investor, right? Okay. In fact, very successful man in the world. Okay. So what he adopt? Be fearful when everyone is greedy. Okay. And the other way around, be greedy when everyone is fearful. Okay. So it is true. Okay. Because when we monitor this CNN fear and greed index, right? Okay, every time when market is very greedy, we actually see lesser return opportunities. Okay, but on the other hand, every time when market is very fearful, when it touches this 20 line, right? Okay, so this is a time where we see market rebound. Okay, yeah. So it is advisable for us to always ignore noises and invest according to this technique, okay? To look at when market is very fearful, when market has came down very badly, okay? Yeah, it's very difficult to time the market in fact, okay? Yeah. But what we can do is to look at every time when there is a big sell down, then we can enter into the market maybe on tranche, by tranches, okay? Do dollar cost averaging, right? And here, the slide here, basically we have good news and bad news. So which one do you all want to listen first?
Bad news.
Bad news, okay? The bad news is there's always negative performance in the market, irregardless of which year you are investing in, okay? So this graph basically tells us that, the red dot represent negative performances in every single year, okay? The detraction period, okay? And the gray bar represent the total return from 1st of January until 31st of December, how market has performed after the drop, okay? So, for example, like this, 1980s, in this year itself, the market did drop 17%, but subsequently it rebounded, and at the end of the day, at the end of the year, it actually made 26% gain in totality, okay? So the good news is, when you look at the bar here, they are basically more positive years as compared to negative years, right? Okay, so let's stay invested, okay? Yeah, then we always say that we would, for those who time the market, if you really very, very sharp, you manage to buy at the lowest, okay, and you sell at the highest, so you will make the maximum profit, right? Okay, but is it easy to do so? It's not easy, right? Okay, so this is a statistic to show us how S&P 500 index perform, means general market performance, as compared to average equity investors, okay, like us, we trade ourselves. So how much is the average return we made on year-on-year basis? So it basically shows us that S&P 500 has made 9% throughout the tenure of 1993 to 2022, okay, 9% per annum. While for average investors, we only made 6.8%, okay, yeah. And this chart, it tells us that, as long as you miss some of the best days in the market, okay, yeah, so this is how it will eat up your returns at the end of the day, okay. And usually what happens is, when market tumble, the sharpest rebound is always the next day, correct? Agree with me? Okay, the sharpest drop in the market always followed by the sharpest rebound. So if you miss this rebound, then what happens is you will earn so much lesser, okay? Yeah, so let us not try to time the market, but rather let's continue to stay invested, right? Yeah, we also talk about volatility in the markets, okay? It's a norm. It's a norm to see volatility in the market. But is volatility necessarily be a bad thing? No, right? Okay. Sometimes it may also present opportunity to us. Okay. But of course, if let's say you say, I really don't like volatility. So what you can do is, you can look for longer term. Okay. Because volatility is manageable with time horizon. Right, so from the chart here, green bar represents stocks, blue bar bonds, and gray bar represent mixture of bonds and equities. Okay, so these are their performances across different investment time horizon. For example, if your investment time horizon is only 1 year, so your upside potential for equities is 52%. Okay, but at the same time, there is also 37% negative downside chances. Okay, yeah. So for bond, you may have 33% upside. Then at the same time, you may also face negative 13% downside, okay, on a single year itself. But what if you can pull your investment time horizon to longer, for example, 5 years, 10 years, 20 years later, okay? So these are the actual data that we put, okay, from 20 years back. So if you have invested into equities, the chances of you making positive return, yeah, is there, but the chances for you to make a negative return has already gone, okay, yeah, right? So basically, investment time horizon will help us to reduce our volatility, okay? Yeah, and at the same time also, we continue to encourage diversification, okay? So all these different colors, right, represent different sectors as well as different asset classes, okay? Yeah, so if you take a look at all these colors here, right, you will notice that there is no single color that always stay on the top right, okay? There's also no single color that always stay at the bottom forever and ever, okay? Yeah, sometimes you may see, like for example, equities here, equities here, okay? Yeah, so what we try to emphasize here is on asset allocations, because that will basically help us to effectively lower down your volatility, but at the same time, help us to optimize our return, okay? Yeah, so annualized return from 2009 to 2023, around 8%, okay? But in terms of volatility, it is actually at the bottom of the columns, okay? So diversification is a key. Yeah, and of course, it is not easy for us to take diversifications because every time, yeah, this thing happened, for example, in year 2000 to 2002, right, when market tumbled, okay? Diversified portfolio, what happened? Negative 15.7%. So what customers tells us? I lose money because it's negative 15%. But in actual fact, it is losing so much lesser, right, as compared to broader equity market. Yeah, and in year 2003 to 2007, okay, this one, okay, diversification work. At the year of 2009 to 2019, when S&P 500 made 351%, but diversified portfolio only made 237%. So clients say, okay, I didn't make as much money, okay, I made lesser. So this thing always repeat, I lost money, I didn't make as much money. But at the end of the day, we can see your diversified portfolio, right, still registered a total return that is quite similar or slightly greater than investing in equity markets, okay? Yeah, so it basically gives us lower volatility, but at the same time, similar kind of returns, okay? Not too bad, right? Okay? Yeah. So at the same time also, we need to understand the risk-return relationship, okay? So in general, higher return always come with higher volatility, right? Lower return, lower vol, okay? Yeah. So now we are going to share with you guys some of the themes that we talked about, okay, more recently. Yeah, we will talk about New World Order, the next frontier of which is AI, okay, the next mega trend, the climate of change, infrastructure building, as well as rethinking long-term capital allocations, okay? Yeah. So previously, 10 years back, we talked about multipolar, okay? During that time, we have this superpower, right? US, the NATO, right? Every time they say one word, then everybody follows, right? And also, it used to be a very business-friendly kind of environment, okay? Where everybody says, I'm going to shake hands with you. So we do a free trade, okay? I'm going to do another business, relationships, okay, together. So they were all friends, okay? But what happened nowadays? Yeah, subsequently, yeah, then we have this Russia-Ukraine war, everybody not happy, then say, if you don't listen to me, I'm going to sanction you and stuff like that, right? But another party also stand very firm. So we have more and more power that is rising up. Russia, China, North Korea.
Away from the US, the Western world.
Yep. Okay, I'm not going to say more about that. I don't want to get bombed. No, just kidding. Okay, yep. So we talk about bipolar nowadays. Okay, there are more protectionism. For example, US says that they want to protect their intellectual properties. I'm not going to send to China, so I'm going to sanction China and stuff like that. Okay, yeah. So that is the reason why we are seeing supply chain reorientations. Okay, last time it used to be China that manufactured almost everything, right? Okay, every time you look at whatever product you look at is made in China. But what about nowadays? Made in Thailand, made in Vietnam, made in India, okay, from other places, made in Malaysia as well. Okay, yeah. So now we are seeing more and more supply chain that is shifting out from. Shifting out from China and then to other countries, for example. Okay, yeah. So therefore, we also need to look at investment in a different way, okay. Not just to look at how China going to grow, okay, but also look at other places. Yeah. Sorry for the technical. Yeah. Okay. Right. So we also look at what are the opportunities available in the markets, okay, because of this kind of situation. Yeah, for example, in India, okay, it's a really rising star in the market now, in the region now. And then at the same time, ASEAN countries, the Southeast Asian nations, for example, like us, Malaysia, Indonesia, Vietnam, these are places, okay. Yeah, so we talk about bipolar, what are the opportunities? Then at the same time, we talk about AI, okay, in technology. Yeah, so we have all these advanced tech right nowadays. But when we talk about back in 1980s, I wasn't born yet also. Okay, so during this time, when you take a look at the desktop, perhaps you all don't even know what are these things. But basically, the one that I know is computer the PC. Okay, then fax machine. Okay, yeah. Some other things. But what happened now in comparison? Okay, when you take a look at your desktop, it's very, very clean, right? Basically, you just need one tab. It gives you all the functions. Okay, yeah. And we continue to believe that moving forward, this AI will play a very big role, just like how we have experienced touchscreen on smartphone. Okay, yeah. So when we do a survey. So these are the surveys that done by KPMG, okay, across different segments, okay, of companies, right? So they ask them about these few questions, like, how would you expect these AI things will impact your businesses? Okay, will they give you profits? How will it increase workforce productivity, right, and so on and so forth? Okay, so these are the responses given by all these companies. So in general, it's not too bad, okay? And at the same time also, when they ask how would you see AI, will you adopt AI or not in your businesses, okay? Some say not yet, but then they are looking forward, maybe perhaps in 2 years later, they are going to adopt, okay? Some are already at pilot phase, okay? 42% has already adopted. Okay, so this number has basically rise higher as compared to what we've seen 2 years back. Okay, yeah, there's only 3% that says no plans at all. Okay, yeah, and at this current juncture, there are more companies saying that with AI adoption, it will effectively help them to cut down their costs. Okay, yeah, about 29% says it will help them to generate new revenue streams. Right. So we think AI will continue to be the next big thing. Then we talk about climate change. Okay, so I believe this is a common goal from across the world. Now there are more and more countries participating in these topics of carbon neutral, okay, or to this net zero, okay, the road to net zero. Yeah. So we talk about carbon capture first, okay? Then subsequently carbon neutral, then net zero, okay? So these are their target, okay, to reach carbon neutral at this current stage. So many of them say that by 2050 they want to achieve this target, okay? So in order to ensure cleaner environment, what should they do? Okay, yeah. So we see a lot of changes in terms of replacing old energy with a new energy, with clean energy like wind, like solar. Okay, so this graph basically tells us that solar installation has picked up a lot, especially in this year itself. Okay, it's leading by China. Okay, then followed by other countries as well. Yeah, and then EV sales nowadays is very interesting, right? We have been seeing more and more EV on the road, okay, as compared to just few months back, okay, beginning of this year. So we are also seeing more and more EV sales coming up as compared to ICE, okay? So infrastructure, we talked about AI revolution earlier, remember? We talked about climate change, multipolar become bipolar. So nowadays, a lot of people also worried that, a lot of countries also worried that if, let's say, I'm being sanctioned, so what should I do? So they also look at self-sufficiency, okay? At the same time, we also talk about renewal of aging infrastructures, okay? Yeah, so for example, AI revolution, what is required, okay, in order for us to have these AI applications to work, right? Basically, it will be your data, okay? You need a lot of data, okay? So that's why we are seeing more and more data centers that is coming in to Malaysia as well, okay? We also talk about power supply, your smart grid and stuff like that, okay? You need very reliable connectivity, very reliable power supply as well, okay? Yeah. We also talk about climate change, renewable energies, solar, wind, etc., etc. Okay. So now, in terms of infrastructure growth, when we talk about their sentiments, right? How do they see all these infrastructures growth potential in the future? So they are more believe that there might be slight growth to moderate growth to strong growth, okay, as compared to no growth. Yeah. Rethinking long-term capital allocation because there is these changes in the market happening, right? And at the same time, we also talk about volatility in the markets. For example, impending US elections, right? We also talk about ongoing geopolitical tensions, US-China trade tensions, and so on and so forth. So therefore, we also need to look at something that is more quality, okay, more defensive, right? At the same time, if you still remember, just now we talked about inflation, we also talk about interest rates, right? So inflation, is it very high now or low now?
Quite high.
Is it? For Malaysia? Okay, yeah. In global context, actually it has came down, yeah. Okay, all the way from 9.1%. Still remember CPI, 9.1%, trend down to 2.9%, right? And for Malaysia, official data, inflation is only 2%. Okay? Yeah. So with inflation coming down, so what happened is global central banks, they are looking at normalizing interest rate. Okay? So they are looking at cutting interest rate down. Yeah. So what will happen every time when there is interest rate cut for bonds, towards bonds? Yeah. So this is what happened. Because bond prices has came down drastically. Still remember, post-COVID time, bond, equity, they fall together. So during that time, bond prices has fall to a level where it provides a very attractive yield to maturity. Okay? So for example, US Treasury gives us YTM of about 4.6%. Okay? It used to give us only 1.8%. But then now it looks so much more attractive, right? Okay? Yeah. So this is a time where people may want to look at locking their money into this kind of places. Because if you continue to put your money into time deposit, for example, US dollar time deposit, now it is giving you 4.5%, for example. But last year, it was 5%. Okay, from last year to now, have we experienced any rate cut? Not yet. Okay, but even before the rate cut, when noises come, everybody starts to foresee that there will be reduction in rates. So that's why we are seeing this. Time deposit readjusted downwards. So what's more, if let's say there is rate cuts that happen subsequently, right, then your rates will drop even lower, correct? Okay, so that is a time where you need to look for alternative. But you don't wait until the rate adjusted downwards, only you react, okay? Because by that time, it will be too late already. Yeah, so what investors do now is, they look for alternative, for example, like bonds, like treasuries, to lock into this attractive yield first. Okay, yeah. And at the same time, because more and more demand that comes in right into bond every time there's interest rate cuts, so that will also give us another opportunity, which is on bond price appreciation. Okay, so this is also another area that you guys can explore, because in the past, every time when there is 1% fall in interest rate, so this is what happened to different treasury or fixed income instruments. Okay, 1% fall, 2-year US treasury gone up by 6%, 5 years 8%, 10 years 11%, right? IG gone up 12%. Okay, so this has been what happening in general to bond markets every time there is interest rate adjustment. Okay. Global outlook, we continue to see growth across different economies. Okay, but majority of the GDP growth will largely come from the ASEAN countries, the emerging countries like India, China. Okay, yeah, and for US, we are talking about soft landing. Okay, at this current juncture, but because there is this talks about interest rate cuts, so it is in general something good to especially your equity markets. Okay, yeah, because interest rate lower, which means companies can have more free cash for them to expand their businesses. Okay, in the future, right? So for equities, more importantly, we look at their earnings as well. Okay, to support the fundamental. So as long as your earnings is good, then it tends to provide us with better return. Because in the past, if we take a look at this graph here, right, purple color represents earnings. Okay, so when you take a look at that 15-year annualized return, most of their returns actually driven by earnings itself. Okay, yeah. So we need to always monitor on corporate earnings as well to look at how strong or how solid is the fundamental of the companies itself. Okay, yeah. So in order for us to manage our wealth, okay, start invest now, but of course at the same time, invest according to your own risk profile. Okay, so where you can look at, still remember, we have unit trusts, we have structured products, we have bonds, as well as we have cash instruments, if you all still remember. Okay, so maybe you all can start with something that is safer first. For example, in fixed deposit, okay, to look at something that generate maybe 3.5 or maybe 3% kind of return for you guys. Okay, yeah. So that's all I have for today. So I'll pass the floor to our investment treasury head, Ronald, to share. Okay.
Thank you, Elaine. Thank you. Okay, so my name is Ronald. Okay, I'm afraid of sinkhole actually. Nowadays popular sinkhole. Okay, so I just want to add on to what Elaine just highlighted. Right? Remember she talked about when you invest, right? Either invest in equity, you invest in fixed income, what you invest in crypto, you invest in property, you invest in whatever thing you want to invest, right? I think most importantly, what can we do with cash? Are we going to deploy everything inside there? Don't be stupid lah. Don't do that, don't do that. I think it is very, very important is that how can we manage our cash effectively? Because in investments, like what Elaine has highlighted, we have two main big approach. Number one, you see you put everything in. Okay, that was joking, but you put more in. Or you do a diversification where you can diversify. So while waiting for this where do we put our cash? Okay, let me introduce to you. This is something what the account is what we call the 360 account. So what is 360 account? It is a product name only lah, huh? Okay. So this is like something like your fixed deposit, something like your your savings account. So how does this one work? So you put it this way, right? Putting in whatever deposit instrument or while waiting for opportunity for you to invest, right? Because I believe when you make your money, you want to keep first, right? You don't continue to invest, right? You get burned very easily, right? So while waiting, how do you get more out? How do you make more from the money that you have? So look at this. This is 360 account. It's a deposit account that pay up to 5% per annum. Very interesting, right? So how do we get this 5%? Maybe I move on to the next slide. So when you open this account with us with OCBC, right, you get entitlement of 0.1%. Base rate, this is base rate. Very boring, right? Never mind. Then you put at least 3,000 per month or 500 every month. Then you get additional 2.8. So when the time I think you tell your mother, mommy, give me the credit card, give me the some deposit money, I help you pay the bill, right? But use your name, but use her money, but put your name. So you earn additional 1.05. All right. So maybe then you can let your mother know, hey, why don't you subcut put my name also, so you can also swipe. So you earn additional 0.105. Additionally, from there, sum up, you're going to have 5% for every additional money that you put inside. So this is one of the way, right? Whenever that we invest, right, we need to also take charge of how do we effectively manage our cash while waiting for the right time to deploy that money into investment. So 360 account with OCBC is one of the best way for you to maximize your return while waiting for the opportunity to come. All right. So from there, so this is, if you put it this way, this is how can you make from here. Is from this side, you can see if you do nothing, how much you make. If you do something, from there, overall equals to how you earn deposit interest, you pay your bonus interest, and how you earn and spend the bonus interest, you get up to 5%. So even though if you go into our OCBC corporate website, right, you can do a calculator. I put the amount there, simply put, I put 20,000, I put 10,000, I put 1,000. Easily I can say that, look, if I pay my 3 bills online, all right, I get my OCBC credit card, and this is how much calculate. It's easy for you to visualize how much extra money can you generate while waiting for the opportunity for you to invest, right? Don't simply go and find something just because you want to invest. Wait for the right time, right? Diversify, deploy your cash wisely. While deploying, this is one of the way for you to look at it. Okay? So how do you do that? Very easy. Scan the code. Okay, this one we will or check with the booth outside called free cup. Right? So this, I think at least for now we are running a promotion. Alright? What we can do right now is that if you open an account with us with a minimum deposit of 500 ringgit, you get a 30 ringgit reward. And make it best, you refer to him. Then you get additional 30 ringgit, he get 30. And you refer to him, you get another 30 ringgit, you get additional 30 ringgit. You see, it's like a chain effect. And this is what we call a member get member. It's something that we can take advantage of it. Alright? So from here, this is how we sign up. Download our mobile app, sign in, put the referral code, voila, money is there. Alright? So from here, I think that is my short and simple way of highlighting, address to everyone, how can we maximize our cash while waiting for deployment. So from there, I would like to introduce the next speaker, which you want to intro first or you want to do an introduction first? Yes, please. To introduce you back to the MC, to introduce the next speaker. All right, thank you.
Thank
thank you so much for sharing earlier by Madam Yiling. So now for the next topic, I'd like to introduce to our next speaker, Mr. Zairul, who will be sharing on Islamic banking. So now, without waiting any more time, I'd like to pass the mic to Zairul with a round of applause. Thank you so much, everyone.
Hello, hi, good afternoon everyone. So, seems like everyone looks like quite tense. So, I will make this brief. So, my session will be about 10 to 15 minutes. So, before I start, can I know if there's anyone from non-finance background? Sorry?
Finance from a finance.
Non-finance background. Okay, oh, so got a few. So, I will use like layman terms so that everyone could understand clearly on this topic. Okay. So, as an introduction, financial analysis is like important because like analysts use this information to make the informed financial decision. So typically there are two ways that analysts use for to do analysis. For first is fundamental analysis, whereby they dissect through the financial statements, and also they look at economic indicators. And another one is technical analysis. So this method is whereby they look at the share price movement and also on trends, on the market trends. Okay, and secondly, on overall focus on basic fundamental investing. So this one is actually for you to identify undervalued stock. So technically this can be done by looking at certain ratios like PE ratios, PB, EBITDA. Okay, and also another thing is for long-term investment strategy. So when you want to invest in a company, you will typically look at things like capital adequacy, asset quality, the management competency, earnings potential, and also liquidity of the company. Okay. Okay. So on basics of financial report analysis. So technically, every year, like us, we'll do like annual health checkup, right? To know like how's our health and all. So for companies, they have to do things like they have to go through like audit. So by then they will have something called like financial statements. So inside there they will have like balance sheet, income statement, and also like cash flow statement. So technically balance sheet is like a asset position. So like last year and this year, to see the movement in balance sheet, typically we look into the income statement. Okay, so another thing is to see if you want to check on the cash flow position, to check on the cash movement of the company, we look at the cash flow position. So to give example, if you buy a car, let's say a car costs 100,000 ringgit. So if you pay using your own cash, so let's say like 10,000 ringgit. So asset, we record your car as 100,000 ringgit. Equity portion we show 10,000 ringgit, and the balance will be under liability. So in the coming years, you will see the amount decrease. Example, the car price dropped to 90,000, and also the 10,000 depreciation will go to income statement. So it will reduce your equity part. So that's how typically accounting works. Okay, so methods for financial report and analysis. So there are a few ways. So the first one is horizontal analysis, whereby you take the financial statements of a company, let's say 2020, 21, and 2022. So technically you see things like the revenue over the years, and also like how the income growth over the years. And also another method is vertical analysis or common size analysis. So this is how usually they will arrange it in the form of percentage. So perhaps like inventory is 100,000, so they will divide by the total assets, so you will see it in percentage form. So like it will be easier for analysts to analyze the company financial statements. And also another thing, after you have all the information, typically you will calculate things like I would say like current assets, current liabilities and all, and also you will produce things like the I would say like the key ratios. So we have like liquidity ratios, efficiency ratios, profitability, and also solvency ratios. Okay. And also finally another way to analyze is via cash flow analysis. Okay. And also talking about the case studies. Okay, actually here I put a recent stock market, but actually I would like to share something like perhaps back in early 2000. So there was a company called Enron Corporation. So what this company does is that they did some creative accounting things. So they were using like off balance sheet technique so that they can hide their liabilities through special purpose vehicle. So that's one. So another case, perhaps you could look to this one case called Lehman Brothers. So this was back in 2008. So Lehman Brothers, they used this technique called repo 105. So means like repurchase agreement 105. So before quarterly reporting, they will sell their liabilities. So this one will be recorded as sales. So these things are technically like illiquid asset and also like non-performing asset. So prior to the collapse of this company, prior to this company collapse, they hit around like $50 billion. Yeah. So also like this company after this company collapse, I think that this company is one of the key things that happened before the financial crisis in 2008. Yeah. So I think that's all from me. So very brief. So hopefully you guys can get something from that. Okay. Thank you so much.
Dah habis.
Ya.
Tanya.
Ada satu.
Oh ni. Brilliant sharing earlier by Mr. Zarul. Round of applause everyone.
It's better. Oh.
So thank you so much for that. Now I'll introduce the final speaker of the day, Mr. Badrul, the Vice President of Global Market Islamic of OCBC Bank, who will be sharing his insights on Islamic finances. Now, a round of applause. Let's welcome our last speaker of the day.
Assalamualaikum. Sorry, hello. Okay. Assalamualaikum everyone. Good evening. I hope everybody is still cheerful and wanting to hear more about what OCBC is and what we can offer. The thing is not there. So just as an introduction, my name is Badrul. I started off from conventional banking actually, and then in the global markets, or we call it treasury. And then after that, after a few years in treasury, I decided to venture into Islamic banking because of the potential, and of course maybe it's also part of my jihad lah. Because as a Muslim, I believe it's part and parcel of our duty to also venture into Islamic banking, and also to to spread the awareness about Islamic banking. Yep. Okay, don't worry. The slides actually quite lengthy. There's about 30 plus slides, but I'll try to go over it as fast as possible. I'll keep it sweet and simple and to the point, so that you guys won't fall asleep. Yeah. Okay. Next. I can use this. Is it? Sorry. Alright. This one. Oh, the other way around. Okay, before I proceed with what is Islamic banking, I think it's important for me to highlight the development of global Islamic banking global-wise and Malaysian-wise. Because for me, this is where we can appreciate what the country, Bank Negara specifically, and also Securities Commission has been doing in developing Islamic banking in Malaysia. And how we can see from here, how it's actually affecting the development of global Islamic banking. Because you can see, we started off in 1960s, right? And then up to 2000-ish, you can see most of the development is from Malaysia, right? So we have to really appreciate and to give round of applause also to the Bank Negara Malaysia and also to the government of Malaysia on how they are actually really determined on how to grow up, to grow and to create awareness about Islamic banking. Yeah, this is very important. And then sometimes I also wonder what's actually happened before 1960s. Actually, where was Islamic banking at that time? I'm too old to study back whatever it is before the Ottoman Empire. Maybe how they finance. Maybe you guys can research on that. Yep. Okay, this is where Islamic banking in Malaysia is, and what happened, and how did it happen? How did it grow? Like it started off in the 60s using a Muslim Pilgrim Savings Corporation, which is now it's called Tabung Haji, and all up until now, where we just launched recently in 2019 about Islamic fintech. Yep. Interesting. Okay, what is Sharia? One thing about Sharia, somehow it gives a negative connotation to some people, especially the non-Muslims. Don't worry, Sharia means it's actually just a law or way. Technically, if you want to see literally, well, I'm not actually, I have to disclaimer, I'm not actually, I have a Arabic background or whatnot, purely Malaysian Malay, so this is what I learned. Yeah? Sharia is basically like a path to a water, something like that. So imagine like this when you're in desert, so this Sharia is actually a way forward for you to get some purity, some refreshing, and then this is what Sharia is can be given to the public lah. So this one, the Sharia, what we're going to talk about is Sharia Islamic banking. Yep. So the Islamic law relating to all aspects of human life. So you guys can read it as well. There are various aspects rendered under Sharia, which one of it is muamalat, which rule the relationship and transaction among humans and entities. Alright, what is Islamic banking? Right. Basically, Islamic banking is just like conventional banking. Right. In the end, it's about how the banking is actually intermediary between the deficits unit and the surplus unit, and how they can manage to get it formed or together, to meet together in between, right? But the only difference is that we, under Islamic banking, is that we do that without using the prohibitive elements like the riba and haram transactions, right? Okay. The differences between conventional and Islamic banking. Yeah. So the conventional operates primarily on lending and borrowing, but Islamic on the various Sharia contracts. Yeah. And conventional, the relationship between bank and customers are mainly lender-borrower as they transact on loan. But in Islamic, it's more of like a business relationship, like customer partners, investor trader, buyer, seller, lessor, lessee. Before I proceed further, just wondering, any of you actually, is the university actually teach Islamic banking?
Yeah.
Yeah?
So elective subject for that.
Elective subject. Oh, that's good. Okay. So any one of you is already picking up Islamic banking?
First year students.
Good. All right.
Studying in an institution of Islamic finance.
Right. Here, you?
No, it's an international online.
Nice. Oh, okay. Maybe you might know more than me. Okay, good. Good. Okay. Alright, this is the Islamic banking terminologies in English and Malay. Basically, like conventional, we have a lot of the list here, and how is it being terminology different in the English and also the Malay. And you can see why the difference is because the different meaning gives the different governance, and also because of underlying contract, so we have to use different terminology. Obviously, like the words of like interest cannot be used in Islamic banking because we don't actually give out any interest. That's riba. That's basically not permissible in Islamic banking. And also because of that, there is a legal document. Next. Okay. This is the prohibited elements in Islamic transactions. I mentioned just now. Main one is riba. Second and third is gharar, maisir, and haram items or activities. Actually, number 2 and number 3 is also prohibited in conventional banking also. It's just that. And then just a point of easier to remember, I was taught by my previous, seniors in the bank. To remember this is like Islamic transaction prohibited elements of Maghrib. So you know Maghrib? So maisir, gharar, and riba. So Maghrib there. So yeah, just that. Okay. Wisdom behind the prohibition. Like we said, riba cannot be used as commodity, and gambling, we don't want zero-sum game. Uncertainty, when we transact in Islamic banking, it must be something that is clear. There's no ambiguity between two parties. Yep. And obviously, there's no haram activities or business. So this is the most important thing in Islamic banking transaction. There must be an akad before every transaction is done. So this akad is not just like akad as in nikah akad. Like this is ijab kabul. Ijab kabul doesn't mean it's just for about wedding. Ijab kabul is also basically ijab means offer and kabul means accept, right? So both parties need to fulfill their obligation according to the contract. So this is where the essence of the akad in Islamic transaction is. You really have to have that contract understanding in between two parties and what is to be expected and what is not to be expected. Yeah, there's no ambiguity. So in such elements of akad, there's two contracting parties and there's subject matter and also for acceptance. This is normal. Even conventional have the same thing as well. So let's go to the Sharia contract in financing and investment. All right. Okay, there are a lot of types of Sharia contract. It can be listed down under the sale-based, lease-based, equity-based, others. Don't worry, we won't have to go through the whole thing, because if we were to go the whole thing, that means we have to have like a 2-day session. This one we're just going to be like 10 minutes, 50 minutes, so I just go through that what is important and what is prevailing and most transacted in Islamic banking in Malaysia. Alright, so we go with murabaha first. This is basically a cost plus profit sale. Yep, it refers to the sale of an asset where the acquisition cost plus profit are disclosed to the purchaser. So when I transact with you, you know what's the cost and you know what's the profit. Right? This is a trust receipt. This is the modus operandi. It looks very a bit complicated, but trust me, it's actually quite straightforward. And I actually, if you can you go to the addendum side, the slide 30 something. I've make it because what I have here is actually a very okay. Just last done. Yeah, last kali addendum. Yeah, this one. Okay, so these are the ones that I think that I can share with best to share with you at the moment. Commodity murabaha, what is it? Is this purchase of Sharia compliant commodity? And ijara, basically it literally means lease, buy sarf, card, and mudarabah. So this is the murabaha. Just now it looks a bit complicated, but it's actually a simple way. So let's say this one, there's a personal financing. Say, let's say this particular person needs financing, right? This guy needs a financing, maybe a personal loan. So what they can do, they're going to approach the bank and then they will conduct into a commodity murabaha. So the bank will buy the commodities, right? And then sell the commodities to the person. And then the bank will then act as an agent for the person to sell back the commodity for him to get the personal financing. So let's say it's 100,000, so they buy 100,000 here, 100,000, so guy got 100,000 of personal financing, personal loan, right? And then so the repayment to the bank will be on the deferred payment, so the dollar plus profit here. So this can be like, let's say your personal loan is 3 years, 5 years. This is going to be spread out between the 5 years, the profit payment. The next Sharia concept will be the ijara. just want to highlight, this is the mortgage, basically the conventional way of, let's say, of buying a house. So, like the normal way, the husband and wife here, let's say they want to buy the house, they go into sale purchase agreement, and then they need the money. The bank will actually pay to the person here for them to pay to get the house, and at the same time they will get the house, right? They give the security interest to the beneficial ownership of the house to the bank, and then they also give the payment interest. Okay, the difference with the Islamic under ijarah concept, which is leasing, is you can see more or less the same. It's just that there's a leasing contract here. So they basically entered into a leasing contract instead of buying, lending and borrowing, where this couple have to pay rental every month for the remaining finance period, right? Okay, next one is mudarabah. This is on how you as an investor, the bank will be acting as a mudarib, as a fund manager, because just now you as highlighted by Yiling just now, on how you're going to invest in certain asset classes. So you can actually just give the fund to the mudarib here, the bank, who will be acting as the fund manager to invest for you. So with the yes, of course, the asset classes here will be Sharia compliant assets, and then after a certain period of time, then you will get the profit, which will be based on a profit sharing ratio, which is agreed between the two parties, you and the bank, beforehand. Like maybe 70-30 or 80-20, where the banks get 20% of your profit, 30% of your profit. So this is one of the ways currently offered in the bank as well, under unit trust. And then this is CORD. CORD is basically means benevolent loan. Benevolent loan is basically when you give lending to like party A, bank A give lending to party B, right? It will expect a return of only the principal amount, but of course B can also give a hibah in return as well. So this hibah is not basically like a predetermined rate. So this is basically something like okay lah, since you give me 1 million, I give you 1 million plus certain percentage of return. And usually, since it's the bank transaction, it will be based on the prevailing market rate. Alright. So, oh yeah, okay. So get back to the where we left just now. Okay, this is all the rest of the see just like this one, financing product. You can see it's very complicated, but as I explained just now, it can be quite easily explained. Maybe if you guys want, maybe we will share these slides for you guys to study further on this. And then there is wakalah appointment in the murabah transaction just now. Wakalah basically is the agency concept, where basically like in that example just now, the customer gives the wakalah, contract to the bank as a wakil for the customer to do all the transaction of the community murabah. Right, and then this is the ijarah mutahayah bi tamlik, as I explained just now on the leasing. Yep, the leasing contract. And then so you get how it shows here. It shows a bit complicated, but like I mentioned, explained just now briefly, it's quite straightforward. And this is mudarabah. Yep, I explained just now. And wakalah, yeah, where the bank actually acts as a wakil for the beneficiary. This kafalah is a guarantee. Bayad-dain is a sale of debt. We don't want to go through all this. Bayasaf is where this is exchange money for money, where you do the foreign exchange. And lastly, this is all other the Sharia concept that is available with the Ocbc. So what I'm trying to highlight is also the fact that if you see all these naming terms, I mean all these contracts, right? Essentially, the economic end goal is still the same like conventional banking. It's just that how we are going to approach to that end goal is going to be like, how it's going to be like. It's like how you're going to eat the chicken. Got halal chicken and non-halal chicken. How are you going to make it a halal chicken and how are you going to make it a non-halal chicken? Are you going, right? So like this one, how you make it a halal contract is by putting certain Sharia concept with it. So in the end, economic goals is same as conventional, and it's not that complicated. Because one thing about Islamic banking that I realized, that everybody goes like, so complicated, there's so many documents. Those documents and the complicatedness is just basically just to make sure that the particular transaction that's entered between two parties are halal and according to Sharia requirement. That's it. Yeah, and then the rest assured, those product is actually approved by our basically, because like I want to show here is how our products are approved in the bank, right? You can see the whole flow. It's not just like, okay, I just want to do this product and you can just roll it out. Sometimes for it to get from here to here, it may take like 2 years even, right? So from the business unit, let's say he has an idea of to create an Islamic product, so they have to gather everyone on how to make sure this product can be launched, can be applied. So they go to Sharia committee, right? And then sometimes go back to specialists, and then hold through here. So, and also Bank Negara Malaysia or Securities Commission is also involved to get the product approved. So rest assured, I mean, like, because some people in the public, there's this perception that Islamic banking is just a conventional product, it's just getting this and that. But it actually goes through a lot of layers, where the governance from this particular department in the particular bank, and also this particular department also exists in Bank Negara Malaysia, where they will also vet your application for the product. So it goes through the whole entire process just to get the product Sharia compliant and to be offered into the market, right? Okay, this one you can see, you can read up what's the governance, what does the Sharia committee do, what is Sharia auditors. The Sharia committee is basically on par with board of directors of the bank. So basically their level of what you call it authority is quite high in the bank. So whatever it is that Sharia committee decided is like valid, right? Then we have the Sharia auditor, Sharia risk management, and then Sharia review functions of unit. Yeah. So all these individuals in these particular committees or auditors or units, they are all responsible to make sure that all products are Sharia compliant. Alright. Okay, so at the end of this is the last slide. What are the challenges and the way forward for Islamic banking? Since I joined CBC, and I joined Islamic banking, we have very lack of talent in terms of Islamic product, Islamic banking and Islamic finance knowledge. So this is where we try to hope that maybe some of you can actually join Islamic banking and make it a career for you. Because if you notice, right, Islamic banking, like I've shared in the first slides, right, how it has grown, right? The fact that it has grown tremendously for the past, since the 60s, and now 2020 is about 60 years, and it's been growing very tremendously high, right? As compared to, because we can't really compare with conventional bank, because conventional bank has been exist thousands of years, and it's maybe only 60 plus years, and it's already growing. But then the fact that the only thing now is because we don't have this much talent to make it grow further, and also awareness of the public on Islamic banking. But yeah, so and then this awareness of public on Islamic banking is also the challenges of Islamic banking, because somehow because public has this perception that Islamic banking is only for Muslims, but it's actually not. It's actually for everybody. Yeah. So and then, like I said just now, in the end, the economic goal is still the same like conventional, right? It's just that how to get that economic goal is just different, right? And then unfortunately, we do have this lack of common standard among the players in the global, because some Middle East countries couldn't accept certain Sharia concept, like how Malaysia has developed, and then sometimes Malaysia also cannot accept certain countries as well, right? Yeah.
Some other countries that doesn't follow the Sharia like the Saudis.
Sorry?
And is there other countries that doesn't follow the Sharia, even though the country itself is majority Muslims?
Okay, in a way, yes. Indonesia. Like Indonesia, they do have Sharia banking, Sharia Islamic, but you can see the market share is not as high as how Malaysia is adopting Islamic banking. When it's sometimes because my mind also, because the fact that Indonesia has like 85% of Muslims, but the penetration of Islamic banking is not as high as Malaysia. So this is where the awareness is come to play here, and also maybe the common standard as well, because I've experienced once when I went to Indonesia. Indonesia, when it comes to Islamic banking, they are very, very conservative. Maybe it's good for them. Maybe for them to embrace the new Islamic banking, it's a bit, let's say, slow lah, compared to us. Yeah. So, yeah, that's the way. And then liquidity management as well. So this one is more on the banking side, because most of the Islamic banks, they have some issues to raise some liquidities sometimes. Yeah, because public tends to bank with conventional bank, partly because conventional bank has more products to offer. So when they have more products to offer, so they have lots more deposit placed with the bank. So that's why the lack of talent here is one that Islamic banking needs to invest further, so that we can create more products, or we can create that awareness, at least the awareness that we should go into venture into Islamic banking. Yep. All right. That's it from me. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Yeah, please continue to stay on for a while. We have something exciting to share with you guys. So let's welcome once again our candidate.
Thank you. Okay. You know what is the best part? 5:45. Right? It's after school, after work. Alright, but I only need about 5 minutes. I think after hearing from all the esteemed speakers, right? I've been talking about basic of investments, how you invest your money, right? Talking about Islamic banking, the concept of it, and also talking about financial ratios, what you read about it. I think we did really give about something for you to thought about. So I think something we would like to share, right? I think let me start with a simple, maybe 1 or 2 minute short video about this, right? Okay. Okay. All these things usually happen. Because you know why? Because we want to reserve for Q&A. So we do Q&A now. Is there any questions you have for all our esteemed speakers, or for me, for my last 5 minute session? while waiting for setup, I think it is good that you have something that, hey, I don't trust you, hey, I don't believe you, or I don't understand. I want to clarify. Is there anything that you want to ask me? Since we are here, right? Yes. Who you want to ask first? Everybody. Right?
Anybody.
Yes. How can we help you?
How do you handle emotions when you see unrealized losses?
You see unrealized losses. Okay. Okay. His question is. Okay. I'll take this question then. So how do you handle emotions when? Okay. His question is, how do you handle emotions if you have unrealized losses? Which means you are losing money, but you not just sell, right? But you are seeing it dipping. All right. So very, very important. So number one thought that you when you invest, right, you should never let your emotion, right, be one of your judgment, impacting your financial judgment. Right, that's very important. Remember the herd mentality that Healing highlighted that, hey, sell, everybody didn't sell. Technically, you don't need to sell one, but you sell. Right, remember the graph, that wave one? Everybody talk about, when everybody buy, you see, wait, then you sell. Then technically, you are selling based on emotion. So, to handle emotion, first you need to understand what you are buying. Right, are you buying on speculative positioning, or are you buying based on fundamental perspective? Okay, for example, let's say you buy Bitcoin. Okay, of course we don't sell Bitcoin. Okay, I'm also not going to promote Bitcoin. Don't buy Bitcoin because of me, because I don't sell Bitcoin. Alright. So for example, Bitcoin's drop. Right? If your objective of investing is purely based on speculative, you must have a stop loss position. Which means drop a certain percentage. This is my limit. Remember, she talked about invest based on your risk tolerance. Right? Young can lose everything. Lose 70%. To me, okay lah, semi-young, lose 70% I scared already. My bosses, the older one, lose 30% shake already. So, which means depending on what is your position. Are you speculative? If you are speculative, you must always have a stop loss position. Never be greedy. Right? If you are making money, you must know when to take profit. Always set a limit for yourself. Or if you are fundamental investor, for example, you invest in, let's say, Alibaba. Okay, you all heard about Alibaba, right? Funny, right? Yeah, I'm the one that invested in it. Right? At the price of 300. Now it's how much? Less than 100. Am I sad? No! Because I know they can come back, even though I don't know when. So, but what I'm trying to say here is this. What I'm going to say here is this. Whenever that you invest, the money that you set aside, it's always about diversification. It's always about how you allocate your money and what are you going to do about it. So when it's time to cut loss, or it's time to do rebalancing or rebalancing on your investment portfolio, I mean, when it's time to do it, don't have love for equity, right? Or don't have love for any investments that you have. Oh, I love Alibaba. I hold it for my life. Don't do it, right? Alright, our objective is to make money from it. Whether it's medium term, long term, and what is your perspective? Hopefully, I answer your question. Okay,
Basically, like have a plan for the exit.
So, if you're coming from technical perspective, you must always set your duration, your timeline. I want to make in 3 months. If it hits this level, it's time for me to exit. If it's this level, it is flattish, but it's after 3 months, it's still flattish. Then I look at market conditions. I look at technical indicators. That's one point. Right? If my Fibonacci is telling me that it is flattish, not selling, my MACD, my RSI telling me it's overbought, I think just sell it. Right? Never have love for equity. Right? Understand what is your purpose that you want to invest. Okay? Hopefully I answer your question. Is there any question I can take? Video is ready, by the way. Alright? Okay, let me just zoom it back. Let me show you what OCBC can offer. All of you at the point of time when you graduate or graduated.
What? If you're from the future, why are you know? I'm here to show you how far you will go in OCBC. You're planning to be a personal financial consultant, right? Here's my name card. Branch manager, but how did we get so good at our job? Firstly, it's because of the well-structured career development plan. We both know that OCBC is a reputable foreign bank, and OCBC Singapore just won Best Bank in Asia Pacific 2019, awarded by Global Finance. And it has a wide regional coverage in the world of banking, providing wealth exposures and diverse trainings, such as the Wealth Management Program, a tailored learning solution by Asian Banking School. I'm guessing we learned a lot from the trainings? Yep. We took what we've learned and contributed great ideas that we were rewarded for. Here, let me show you. Wow. Is this our office? Nice, right? We went to Barcelona and Rome? Yep. It's one of the incentive trips by OCBC. Plus, we got this office after we returned to branch management. Hey, are you listening to me? Yeah. What do you mean by return? After 2 years, we wanted to learn more about investment strategies. So we changed our role to become an investment specialist for a couple of years. All thanks to OCBC's internal job posting program, allowing us to explore other areas. We can explore other areas? Yep. Take Chan for instance. He started out as a personal financial consultant just like you. Now, he's someone who served high-net-worth customers for over 3 million ringgit in asset under management. All these are great factors of how OCBC helped in their employees' growth. But to me, this is what helps us all the way. Follow me. These are future colleagues and long-time friends. It's a great working environment, very supportive. Hi girls, let's proceed with Joey's plan. I think customers will gravitate to our campaign. All agree? Alright! Okay, see you later! Wow, that was really cool! Alina is only as good as a team. I think you're ready. OCBC is going to be your best years. Just relax and be yourself. They got you covered. You're right, I'm actually excited. Sarah, too? Yes? We are ready for you? Okay, coming! Hey, do we get married? Wearing a ring.
This is the simple short video to highlight to everyone that opportunity starts here. So here at OCBC here is about helping every new joiner, all right, that join us, we will help you succeed. Because all of you here loves investing. That's why you see the Busayang Investor Club, right? We want to know more, right? You want to know, you want to love what you do more. So this is what we do. Like what Yiling do, like what Badrul do, right? So opportunity starts here. So not only that, so I think in terms of recognizing all our staff, right? I mean, joining OCBC is not only about doing investments all this one. We are also recognizing our performance, which means whatever investments you make the right call, you manage customers, customer make money, you make your incentive, you are happy, you achieve what you want, the bank will also recognize you. In such things is what we call, the principles that we have is work hard, pays off. So this is some of the achievers night that we have. Like we recognize our performance, we held it in this, we give award presentation, recognizing every individual. Alright, not only in terms of award and celebration that we give in terms of recognizing, we are also doing incentive trips. So incentive trips to places like Barcelona, to London, to Dubai. No, we are not just going there to punch card check in. We are going there even for all our performers that that perform, we recognize them by going into experiencing it, like driving a Ferrari at Dubai, visiting the Burj Khalifa, right? Going to Rome, going to the Sahara Desert, right? Enjoying and recognizing your effort pay off. So these are the areas or the places that we go on a yearly basis. We go to places like Japan, we go into Prague, Melbourne, Germany, Taiwan, Rome, Barcelona, London, anywhere you name it. That is where we are recognizing our staff. And that is where this is the reason why opportunity starts here. So here, I would like to show you another video on one of the next destinations that we will be going. I want to share this exclusively, how exciting when we recognize, when you sell your investments, or you can help your customer make money and help yourself make money, and yet the bank will reward you with incentive trips, recognizing you. Where we are going, which is Belgium. This is some snapshot that we are highlighting. Alright, to here, OCBC, it's all about opportunity starts here. There's a QR code. I think that is where that you can excel in your studies. Alright, understand what you need, learn what you need to learn, and that's where OCBC can give you the opportunity in terms of recognition, in terms of excel yourself in your career by scanning this QR code. Thank you. I think that's all from us. Thank you.
Thank you so much to Mr. Ronald for covering the Q&A session first and so sharing about the job opportunities at OCBC. I saw a few of you guys take photo of the Barcelona slide also. So, you guys know where to find OCBC's opportunities lah. And earlier we didn't have the chance to thank Mr. Badrul on his sharing earlier. So, thank you sir, a round of applause. I hope everyone learned something new today, as I believe Islamic banking is not something that really goes through our head. And with that, the learning part of our investing class today is over. So I hope everyone benefited from the class today and hope you all make better financial decisions in the future. So let's give a round of applause to yourself for attending BYP Unlocking Technologies. So before we end the program, I'd like to show our appreciation to our speakers here with a little sweet treat. So first, to present the gift, I want to call my director, Wiser. Handsome guy, single also I think. So first, I want to call Mr. Yiling. Sorry, can you pause 1 second? You want to bring our VOIC banner? Faiz. VOIC banner. Thank you so much. Next up, I'd like to invite Mr. Zarul up front. Okay, last but not least, Mr. Badrul. once again, a big thank you to all our speakers for being here today. I'm sure everyone in this room has probably spent their evenings here instead of sleeping or being at work. So really appreciate taking your time for participating in the event. Also to every OCBC member for spending your paid hours with us today. So really appreciate it so much, and I hope in the future we can work together again. So with that, your director today signing out. Thank you everyone. Before we leave, our photographer wants to take a big group photo, so we have to everyone to come to the center. So stay where you are, but looking aside, please come back to the center a bit. If you cannot move the chair, you can stand also. I have to call every OCBC member to the front.
Like this is your wedding.
Okay. Alright. Okay. Everyone, ready? Alright, 1, 2, 3. One more, 1, 2, 3. Okay, freestyle. 1, 2, 3. One more, 1, 2, 3, 3. Alright. Thank you,
Dah, untuk rakaman sudah tamat.